Good morning, this is Marcus Brown bringing you today's market update. We start in the UK, where the Bank of England has delivered a stark warning to European nations looking to impose harsh consequences on the UK for its vote to leave the EU. John Cunliffe, the Deputy Governor of the Bank of England, stated that London's financial services would rather head across the Atlantic to relocate to New York than go across the Channel to Europe. The warning comes as leading figures within the European Union, such as French President Francois Hollande, have hinted that the EU will drive a hard bargain with the UK. Cunliffe had made clear his views that Europe's leading financial hubs, such as Paris and Frankfurt, will come close to replicating the financial prowess of London. And for that reason, New York will appear the next best option for the companies post-Brexit. In further Brexit news, it appears that fluctuation in the pound will continue as the UK's currency becomes ever more a political basket case. The sterling regained some ground on the back of the first House of Commons meeting since Parliament recess, as Theresa May seemed to subside her push for a hard Brexit. Yet all eyes will turn to the US crunch minutes data for the latest Federal Reserve meeting. The pound is likely to remain volatile for the coming years as Brexit uncertainty continues to dominate the currency's performance. German officials have become more vocal in their calls for a settlement on its huge Department of Justice fine. As Chief Executive, John Crine returned from the US empty-handed at the beginning of the week. The unsettled fine is hindering the bank's restructuring efforts as the lender's share price continues to fall. In oil news, yesterday once again saw a fluctuation in the price of oil as OPEC pointed out that a larger oil surplus may occur in 2017. Oil prices had been on the rise recently with the announcement of OPEC's provisional output freeze agreement, hitting their highest level of 2016. The deal is expected to be finalised at the end of November, yet OPEC has forecast oil production increases in 2017 from non-OPEC companies as output from Nigeria, Libya and Iran increases. In indices, the UK 100 closed down 55.1 points yesterday, but remained above the 7,000 mark, although its slide has continued this morning. The Germany 30 finished down 43.9 yesterday, whilst the France 40 also closed at a lower by 13.7 points. Both have continued to fall this morning. In corporate news, Sports Direct Acting Chief Financial Officer Matt Pearson will leave the company on the 31st of December. The company announced this morning. Herbert Monteith has been appointed interim head of finance at the retailer. Sales at Unilever rose 3.2% in the third quarter of this year. Yesterday evening, it was revealed the company is currently locked in a price rout with Tesco. Profit before tax at game retailer Game Digital fell 81% in the year of the 1st of July. Chief Executive Martin Gibbs said the UK's market dynamics have undoubtedly been tough over the last year. In upcoming data, 1:30 sees US unemployment claims released, forecast to be up by 3,000, and at 4 sees US crude oil inventories data revealed. Thank you for listening.